Welcome to the Opportunistic Trader for October 23rd, a Tuesday, a happy Tuesday for the shorts. Finally, we have no position coming in this morning, but we are happy because we've been saying in the chat and on Twitter, that we thought that low of 27.13 was in jeopardy. And that low was breached this morning. I didn't think it would happen in less than 2 trading days, but I'm happy that it did. Volatility is up a bit. I want to first discuss how much these markets are down on the month so people have an idea. The Nikkei is down 9.5% for the month. The NASDAQ is down about 8.5%, and the S&P is down a smooth 7% for the month. We do believe there is more to come. I think that the correction is by no means over. I think markets around the world are entering bear market territory off their highs. Nikkei, DAX, obviously China, and Hong Kong all included in that, as well as emerging markets are already in the bear market. Our market is still green for the year, Vince. Green. It is up. Everybody is freaking out, but the S&P is up. It's up about 1.5%.
Good morning. Okay, so we're just not making as much money we're supposed to. I'm concerned. I need to call my congressman.
Exactly. Well, we'll see. Today should be interesting. There should be a level in here, and maybe you have it. I don't. That there could be a level of support. We haven't been down in this area basically all year. So it'll be interesting to see if, in fact, there is a support level. We melted through the 27.13 level this morning down to 27. I think the low is 27.10 and a quarter. Interesting trade. I want to point out, because we always look at it, unfortunately, today is not an expiration day, but looking at the straddly around 10, let's say, oh my God, the straddle around 10 is 40 bills. $40, people. $45. Am I looking at that wrong?
Environment for an overdone aggressive trade.
Yeah, for one day. Today and tomorrow. Mike, I got it. I know it's one day today and one day tomorrow. I got it. Right. Monday, Wednesday, Friday. I got it. But that's really, after today, it's one trading day. That's very expensive, $45. So we're going to be trading crazy today. I'm excited about it. Volatility, which we spoke a little bit before we got on the air, Mike and I, it's 24. I mean, it probably should be 27, 28. The last time we breached this level, we were 29. But obviously the first time down, when it's that quick on a 70 handle down day, you get a real big explosion in volatility. And we're only down $38. So it kind of makes sense. We have to see how that plays out. But volatility is up 20% on the morning pre-opening. It's funny. That's why I say, and we discussed this a lot over the last bunch of months, you're always better off being long the vol index, okay, against a long than doing anything else, because volatility pops 10 times more than the market goes down. In this case, almost 20 times more. So, it's always good to have that vol. It's the worst thing in the world to have that vol when you're sucking on it every day when nothing's happening. So it makes it very, very difficult. But overall, it's good to have that vol on, as protection. So, we'll see how today goes. Puts our bid to the sky. I'm letting everybody know the protection is not in place for a lot of people, I would assume, because this is a big down move, but it's not. It's 1.5%. It's not like we're down 4%. But I think people are leery, and we're coming into the point now where if you take out, Vince, and I'd be interested to know this, maybe Mike could run it or someone could run it. If you take out Apple, Google, Amazon, Netflix, and maybe one or two others that are up 50% on the year, these stocks are getting murdered. I'm looking at stocks all on 52-week lows, all the big industrials, the cats, etc. Micron, the semis, all on lows, banks on year lows, everything on year lows, and they're all down. They're down anywhere from 5 to 20%. So it's interesting to look at because without those other names, like Apple's up 30% for the year, or 25, or 27 now. Without that, this market would be toast.
You've got Apple up 30, you've got Netflix up 66, Amazon up 50 exactly, and Microsoft up 28. Agreed. I've been asking that for a few weeks. I haven't gotten anybody come back with an exact number, but yes, you've got to be down 15% if you don't have those names.
And I read an article yesterday, we may have actually posted it, that described it. It reduced it to 3 stocks. It said something about the holy 3 or the sacred 3. That it's basically a rotation back and forth between 3 stocks that are carrying the market higher. And this is what we talk about with breadth. If you don't have those stocks, you're in trouble. And when those stocks are no longer supported or supportable, then you have what I think we're beginning to see now. And this, I'm not saying we're not going to bounce, but there's nowhere to hide. And you're seeing some strength in bonds, which is a reflection of we don't even have faith in those 3 stocks anymore. Whatever those 3 stocks are, Apple, Amazon, and
well, listen, I do believe. Listen, I don't know, but I do believe that everything will slow down once the market comes in. People are so overinvested here that it's crazy. I mean, it's at a level that we've probably never seen, and people freak out, and I mean freak out when the market's up on the year. Let me ask you a question. Do you think this market could handle what's going on in China? I mean, they're down 20 plus. They were down 27. I mean, that's a third of your money gone in investments. I mean,
do Americans have the stomach to handle what the Chinese citizens have the stomach for in terms of economic or stock sell-off? No. The answer is without a doubt, no.
No way.
Right. Put ourselves in their position. Our stock market down 20%. There will be grandma's 401k riots.
I know. Thank God I got my mother out of the market. I feel good. I don't have to take care of her. No, only kidding, Mom. She's in the membership.
You did take care of her. You said,
I take her.
Look, to Grandma, either you're buying a subscription or you're buying puts, or both.
Exactly.
Larry's mother is a FAANG subscriber. I won't give you her screen name.
She loves it. But overall, getting back to the market's down 40, but it's been very calm this morning relative. We had a little freak out down to 27.10, but other than that, since I've been in for the last half hour or so, or a bit more, the market's traded in a $5 range. So it's going to be, it's going to be here on the opening. Yesterday was really interesting. NASDAQ completely outperformed the S&P. The S&P was down and the NASDAQ was up like 70 handles or 50 handles. So, it's going to be interesting out there today. Market should get some selling. There are markets that look interesting. I mean, oil, it's 68. The figure-ish isn't so bad. That's basically $9 off the high, or somewhere around 12-13%. I think the equity market has a ways to go. I'm not saying we can't have a trading bounce or long trades during the day today, but I mean, people are shattered here. I mean, the banks are shattered. Citibank is at $65. That's within $1 of the year low. Bank America, is in the 26 handle. Things don't look so good.
The financial earnings season, meaning on the banks, the earnings season on financials did not bear out well. As we put on the screen, as the info moderator put on the screen today in news, our global industrial companies like Caterpillar, I think they were disappointing. And you're looking at whether you call it United or not, Larry, meaning whether we view it as a contagion type of thing or not, there are different factors driving the markets. For example, in China, they have loosened their monetary policy and it has failed to buoy the stock market. In Europe, the economy, the economic recession numbers are creeping up, and like 1 to 2/3 of the DAX stocks are in technically bear territory, and now it's just bleeding into the U.S. So whether it's united by a global economy or not, for different reasons, the same thing is happening. Everything is starting to go down.
Yeah, I mean, I see it looks kind of iffy out there for sure. I think they toasted these marijuana stocks over the last couple of days.
Did you say toasted?
No.
I mean, was that a coincidence, or are you trying to be funny?
I actually wasn't, but I am a comedian.
Yes, exactly.
I see Tilray's back to 100, which it was, and then it went back to 160. I think a lot of these other stocks, Mike pointed out to me yesterday, got hammered. Goldman getting hammered at 217. Could trade down to 213 was the low on the last move down. Apple, the low was about 213 as well. It's trading 215. I think 209 or whatever is the $1 trillion mark. Potentially they could miss earnings. I mean, China is a much bigger issue, and it's funny, and it gets me a little happy. That we've been talking about this stuff for months, and it finally, came to be. You needed these markets down a lot more overseas, but you got markets in bear market territory. A lot of them, like
15% lower in every other country is unchanged for us. 25%, and we're down 7%, something like that.
I don't know. I think we're going to catch up, but. Again, today should be a good trading day. It's interesting. Like I said, since we've been on, the market's really not moving. So, they're going to attempt to rally this thing in the morning. We'll see if it holds. If it doesn't hold, it could get very, very interesting. DAX is down 1.7. The Nikkei, let's just talk Nikkei. That baby got basted.
Right.
It's down almost 3% on the night. I mean, these markets are not good, not good. So, we'll keep an eye on all of that. Anything going on? Gold.
Gold is up because there's buyers of gold, which sounds like a simplistic thing to say. There's no major currency move, and I do believe people are buying gold. Right now, it's shorts covering because the stock market is rallying, meaning, I'm not, the news headlines that everyone's going to read today are going to be, oh, bonds are up and gold is up. Let's say bonds and gold flight to safety as stocks dump. Fine. You want to play it that way? That's fine. I'm just saying, who bought today? The first part of the buying today is shorts covering. You got a big ton of weak shorts that got in late in the week last week, and they were right early this week. They sold the rally, and I think you've got more shorts covering right now. On a macro basis, I think we've got a lot higher to go, provided we stay above X, Y, and Z. But unfortunately, Larry, the good we had about a week. Okay, this is like the bitter gold traders. The bitter active gold traders are saying we had a week of active trading, and now the moves are humming at night again, and all we're doing is watching. So there's not a lot of levels to trade in gold today, but there is a lot of levels to trade if you're up at 1 a.m. We got to stick with the S&P and gold. I mean, and oil right now, and NASDAQ. If you're an active short-term trader and you want more than one bite at the apple, gold is it is what it is.
Yeah, well, it's basically at 12:41, and I don't want to pat myself on the back again because I've been doing it all morning. The opportunistic trader low was at what, 1160, 1170?
Look, I haven't really laid into you at all. I've been a very. I have to say,
I'm a little giddy this morning.
I believe part of my role is to not be sarcastic and humorous towards you, because I don't know if you're having a good or bad day trading. Like any trader on a desk, stay away from Larry. He's having a bad day. Stay away from Larry. He's having a good day. But I'm going to say this to you. So I want you to stop patting yourself on the back. So I'll do it for you. I really think the move is to find that tweet where you call the low in gold. Okay, get it out. get it dry mounted, and get it framed.
Exactly.
And just give it. And I want you to give it to every friend of yours that you called and said subscribe and didn't.
Exactly.
Right now, the second tweet, the second thing I want you to do is I want you
yesterday,
to take,
you'd be whole for like 3 years.
Correct.
But you can't teach anybody. That's the problem.
Right.
Everybody knows more. So
right, exactly. So the second pat I'll give you on the back, just so you would just stop patting yourself in the back, is the last thing you put up last night was the NASDAQ is acting weird. Look for the ES lower.
Oh, you saw that late? I put that out right before I left.
Well, I mean, if you ever read any stuff, my feelings hurt. You don't read what I type.
I do.
No, but I was up early, just throwing some macro stuff up there. So people, if they were up early and they were tuning in, and I said, "Oh, look at that! Oh, look at that! The stock market's lower." Great, he's right again. So you can take that, and I want you to do that. Take that window and somehow edit out everything around it, and just leave that. Frame that picture and send it to the other people who aren't subscribing, and say, congratulations, good for you. I hope you're doing well. Best of love.
Exactly.
Best of love. Okay, so can we talk actual what you did yesterday? Catch me up, please, because I have been out. I was checked into an inpatient rehab. Sadly, because I saw that you made 10 handles on a long side in the S&P, and it put me into shock. I had to get treated, but I am back, and I would like to know what you did yesterday. Please explain what you did yesterday. I know what you did. Please explain what you did and the rationale. So,
Vince, you're putting me on the spot. I'm not good at that. Those trades are in the book. So
I know, but can you recall?
Mike probably has it. So, Mike, what?
No, but what was your last trade yesterday?
Tell me. What? I scalped 3 S&Ps, buy and sell.
Okay.
And I think we had a really nice oil trade. I think we took 80 cents out of oil. So
nothing specific. A lot of just flow
just back and forth. Nothing
tactical moments.
Yeah, just in and out of the market. Today we'll be doing that again.
So,
but we're a little
with volatility as high it is today, and you being regression to the mean type of person, are you looking at are you looking at directional play?
But I'm a little
expressing volatility.
Yeah, I wouldn't mind buying in here for a shot. The only thing that I don't like is we're at levels that we haven't been at, and there's you always have to be leery at 10:30, 11 for margin selling, and again at 2. So, I don't know if you remember, but when about a week and a half ago, 2 weeks ago, we made the low at 27.13 at 2:00. Off of, it looked like it was the weirdest program I've ever seen, but I think it was a margin seller that had to sell. But I'm leery today. I want to try to scalp at some point from the long side. The only problem is when you get into this 40-50 handle area, it makes it a little bit more difficult. I'd like to buy oil on a whoosh down into the 67.80 area. Don't have anything in the market.
Understood.
I think there's a lot of option trades that can be done here.
Well, that's what I'm saying. On the equity side, if volatility is high and you want to pick a direction, would you possibly be more inclined to be looking at, say, if you get bullish, maybe sell a put spread as opposed to buying a call?
Yeah, I mean, I'm looking. The problem is I'm looking at some put spreads here, and the one that I like is selling the. You can sell the 2670 puts,
right?
Buy the 2600 puts, or you can do that spread for somewhere around $6. The only problem with that, and I like it, and I'm gonna put some of that stuff on. Right. You really don't start getting long until 26, 64, 65.
Right. Because when volatility is that high, there's not really much of a delta spread between it. But to your point, if we rally, volatility is going to get crushed.
Right. But the problem is you can't I like it, but you're going down so far. So right now I have on a 60-point put spread, right, which we don't want to lose 60 points on. But it gets us long at 26.65. I don't really mind that's like unchanged-ish on the year, and that might be the a level for sure that the market will hover around.
Right.
But yeah, there's a lot of stuff to do. There's a lot of guys that have traded with me in the past that are actually in our membership, in our chat, that have actually watched me trade and make money.
Right.
A lot of money, millions a
Right.
day. Know that you could do right now the 2750, 2770 call 1x2 for a very small debit, and that gets you to 2790, which I don't see, in basically 2 trading days, and you're paying very little, and it basically gets you long for 40 handles between 27.
Right. So they're basically a lot more, because of the
27.90.
higher volatility. There's a lot more choices, a buffet, so to speak.
I mean,
and you got to pick
the board looks so juicy right now that it's
you can
it's
pick what's best for
unbelievable.
you. Yeah.
I like selling these put spreads in here that are much lower than the market. But again, what I explained to you before, which I think is important for you to understand, or anyone that's doing this, and you probably do understand it, is because you mentioned it a minute ago, the hedges are very, very expensive. So,
Right.
You're really looking to get long a level, and like I'm buying the 2600 puts, and I'm paying $3 for them. They're, I don't ever say this, but they're like rip-ups. They're not coming into play at any point in the next 2 days, most likely. We
Right.
have to go down 120 handles, and we're down 37 right now, and it feels like a crash. How are we going to be down 120? The
Right.
world will end.
If I can add something to that, to
Sure.
the subscriber base, as a person who plays options from the long side, I'm saying this: volatility is high, and even this is my observation. This is me thinking while Larry's talking. Even though volatility is high, I don't hear a lot about Larry saying he's selling a naked put. I hear him saying he's thinking about selling a put spread.
Yeah,
And
we never sell naked puts.
Right. And the reason that's important for you, even if you are a person who is comfortable selling naked options at high volatility levels, because it's, for your opinion or for your risk parameters, it's okay for you. It's a roach motel. If we go down, you'll lose money, and the bid ask itself will cost you more than you would think. The liquidity just is not there for exits when these things go against you in either direction. So even at high volatility, a person who's not scared of risk is like Larry is looking at spreads, because there are so many more opportunities out there. You don't want to put all your bets on one silly trade.
I'm always scared.
Yep.
But
healthy for the market.
So I have 2 questions for Larry here. Let's start with the first one. Yesterday, you put out a tweet late in the day that you thought the market was going lower. And you actually, the last thing you wrote in our chat room is you thought the market was going lower. Yesterday was a pretty interesting day where technology was heavily outperforming, but banks were down almost 2%. There were some sectors that were really weak. So what was the tell? What were you looking at? And what do you think is leading the market right now?
Well, I thought that the NASDAQ was holding the S&P in, but at the end of the day, the NASDAQ couldn't hold the S&P in. And I thought that the market looked weak and that NASDAQ was the better sell than the S&P. But they've been tracking pretty good. I mean, it's only off by 30 basis points here, or 20. But the tell was basically that the market internals looked really weak, and they were buying the same 5 stocks that they buy every day. So that sort of was a signal to me that the market looked a little bit heavy. And what was the second question?
No, that was pretty much. I do have another question, but then following up on that. So on a day like today, what are you looking at then for the next 10 points? So is it something like, are you looking at technology stocks? Are you looking at financial stocks? Are you looking at gold? Are you looking at what are you looking at?
I'm definitely not looking at gold. I would be looking at how the bank stocks are holding up, how the large cap industrials are holding up, because those are the ones that let us down. So if we see a little bit of light on that, maybe that would be an opportunity to buy. The most important indicator today for everyone out there is the volatility index, the VIX, and the VIX futures. The VIX is trading at 2360, up 20.16%. I want to keep an eye on that. If we make extensions lower and that doesn't go higher, maybe we have the ability to bounce. If that continually has a bid through the day, we probably will not hold. So I would use that as a key indicator, especially in the morning on the opening, as well as looking at how these stocks are faring. Today they're getting to the bigger cap tech stocks. Apple's down 2%, Facebook's down 1.7. What's interesting though, and we're basically on the low of the move in the S&P, and these stocks are well off the low. I think Facebook made a low at 149 and change. I think Apple made a low on the last move down at 113, 112. Netflix is nearer the low. Bad reaction to earnings, but Amazon is still about 50 off the low, or 60 off the low that it made the last time we made the low. So these are, interesting things that we need to look at. The semis are all on the lows. Some reason Tesla's up 3% this morning. I don't see it.
They're short pot stocks, Tesla.
Yeah, exactly. The market, again, like I said, it's an interesting morning because we are holding in here. I do think we're going to take that low at some point this morning and see what it looks like below that. But again, we could maybe rally about 5-7 points in here from this level.
So here's the other question. Question 2 is from a subscriber. He put this in about 20 minutes ago. He said, okay, so volatility's up. We're coming into the market. You have no positions right now. And, we enter the day, volatility is, where it is. It's above 20. S&P's down 36 points. Nasdaq's down 115. When you look to put on your first trade, how do you kind of jump into the pool? Like, what signals are you looking at, and what do you think your first trade is going to be based on what you're seeing out there right now?
I don't know. I mean, it could change. I would think my first trade, looking at the market right now, is a trade up in the 23, 24 area in S&Ps to short for the first trade this morning, to expect some more weakness after the stocks open. But again, I'm not exactly sure. I apologize for not getting back to you quicker than the 20 minutes. But, I would look at options today. There's too much juice in these options to let it pass you by. If I buy S&P at 27.13, why do that when I can buy S&Ps at 26.70? Even though they'll never, they're not there. So I like that trade a little bit more on the long side here. I do like the short side for scalping on any type of firmness, but right now I don't have a trade. It's just, I'm watching the tape, and it'll come to me basis all of the clues that I went through a little while ago. So like I said, it's a little bit, I wouldn't call it disappointing, but it's a little surprising that we're at 9 o'clock and, there's no movement in the S&P. I mean, it's down $37 and it's just sitting, and it hasn't had a $5 range since the opening. So I think they want to see how stocks open. I don't think the market is going to hold in here. I think it's going to get skittish, and we'll have to see how that all plays out. Must be some news in Tesla. It's up $4.
Hey Vince, question for you. Okay, so here we are. Gold's up $16. We're at $12.40. For the longest time, we stuck between $11.90 and $12.15ish, and then we finally had that $35 move, traded up to $12.30, hovered around in that $10 range for about 2 weeks, and now here we are taking the next leg up. Is this move in gold for real, or are we going higher, or is this the move to fade?
I wouldn't be getting in long for momentum trade here. I think we're overextended for momentum purpose. If you were long, I'd consider if you were long from anywhere between 11.90 to 12.20, I would consider taking profits between here and 12.45. Above 12.45, we can run to 12.54. But to answer your question in one sentence, on a short-term basis, by short-term I mean day to week, this is a move to fade. On a longer-term basis, the market is a buy. And by that, I mean 6 months to a year and a half. But for active traders today, you got to be looking at things like 15 and 30-minute charts. So you're long above 1235, you're short below 1245, and we're in the middle of that, and there's really nothing to do on the active trading side. I would like to add on the S&P, I have two levels that are system-based that are coming up, and it might. And I also want to add some color to the question that the subscriber asked about indicators. That I want to expand on something Larry said about volatility. First, on the S&P, just to throw two numbers at you. If we settle below 2738 on a weekly basis, the probability of a quick move lower next week, this is not a day trader's comment, next week is going to accelerate. Volatility will expand. Yes, we could reverse, but whatever move we have will be likely even more violent. On a technical basis, any penetration below 2741, and this is unrelated to what I just said, on a daily basis, any penetration below 2741 that stays below 2741 will give, I'm going to throw numbers out there, a 50 handles lower is on the table. I'm going to say that. And again, not a day trading thing, but if I'm day trading this and I get an hourly signal, I already have my macro bias in, and I'm going to be double my position on the short side if we go lower. To circle back to the subscriber, Larry made a comment that I think could be easily missed, but I think is really important in terms of how someone looks at the market intraday. Like what's on his radar, and he will say, if I may speak for him, he'll say, "I'm not really sure. It depends when I'll know, but I know it when I see it." To be concise about it. But he did say this: if the stock market makes new lows and the VIX doesn't perform like it has been for the previous 2, 4, 6 hours, or maybe 2, 4, 6 days, depending on your comfort zone, if the VIX doesn't move alongside the stock market in the next leg lower, he would strongly consider getting long. On the other hand, conversely, if the stock market rallies and the VIX doesn't back off, it's a logical assumption, at least on a short-term basis, that there are still people that are hedging, that are still people that are worried about the downside, and the bounce is a bounce to sell very more likely. I hope that helps. So if you just want to pick one thing to correlate or look out for an indicator, if we drop 5 handles quickly and the VIX does nothing, consider maybe I should be getting long, or maybe I should be getting short vol, and then give yourself a risk reward scenario that you're comfortable with, and put a position on.
I would be very careful today. I mean, I'm seeing stuff that, in the last 10 minutes that we've been talking have just turned much more negative. Bonds are up 104. Okay. When I walked in, they were up 20. So they're up 104 on the high tick of the day. Crude oil, which we liked at the at the 67.80 area, we're going to look to buy it a little bit lower. It looks like it's going to come in. The S&P just came in the $5 that it should have come in before, trading nearer the lows. It's $3 off the low. We probably at 9:30 will open through the low or in the low channel of this move. But there are external things here that are turning me a little bit more cautious. I do not like the action in crude. I do not like the action in bonds versus for the S&P. And overall, it looks like the next stop in S&P is 2665 potentially. I don't know how fast we get there. I think there will be good trading today, but a couple of things that are popping up on my radar right now is that oil just dropped another 60 cents. It's down $1.50. Gold is, basically
gold is it's a brick. It's stuff into
but it's still near the highs and
literally, exactly, figuratively and literally.
Is a brick. We're doing a lot of.
But the dollar's actually doing nothing.
We have a lot of puns going today.
Yeah, exactly.
Vince, just to get back to gold real quick, one of the mantras, Mark Fisher came on, you were talking about it, 2 months ago when things were really trading heavy. One of the mantras was that it was possibly some central banks that were selling because they need to raise capital. Emerging markets have not performed well. Venezuela, a number of different countries possibly were selling gold, and that was really holding it down. And I would think if that was correct, with global equity markets only moving lower in the past few weeks, that would continue if that was actually happening.
Right. That's okay. I can address that. Ignoring the stock market moves right now. All right. Just factoring that, because obviously that's important. Lower stock market. Okay. A government that is an emerging market that has a small currency float, but has a lot of leverage in their economy, meaning they borrow a lot of money from governments, especially the U.S., denominated in U.S. dollars, is more likely to liquidate currency reserves and transfer every central bank has currency reserves in different currencies, and they carry gold as a form of currency or money or store of value or what have you. And when you are an emerging market and you're fiscally leveraged, you're leveraged, your economy's heavily leveraged, and you've borrowed a lot during quantitative easing, and quantitative tightening is taking dollars off the market, but whoever you owe money to, whether it be a bank or a country, you have to pay it in dollars, you're going to sell dollars. So, although I'm not 100% convinced, well, I put it this way, I'm 90% convinced that in the sell-off, after Venezuela was done, there were other sellers, and I'll put them in three categories. One, an emerging market that had a debt or bond due, probably was quietly selling through a bank. Two, a gold mining company that was struggling, had to balance its books because the mergers are starting to happen in that. And three, bullion banks that saw weakness in other countries who had to pay debts were selling the market short. And finally, the other sellers were funds. So to answer your question directly now is if those banks were selling before, if central banks in emerging markets, if some central bank in some emerging markets were selling before, would they be selling now? Well, it isn't I'm not saying it's not correlated with their stock market. It is, but it's much more correlated with their currency. So if their currency is getting slaughtered against the dollar may be flat, right? But if the dollar is flat against major currencies, G7, G10, but much stronger against the Aussie dollar, I'm not saying the Aussies are selling gold, but that's the type of country, and the Aussies are not selling gold. That's the type of country that would be a seller. So I'll give you compare and contrast. Two emerging markets. One will be Venezuela, and the other will be Poland. Venezuela is highly leveraged, irresponsibly managed fiscally, had to sell their gold to raise dollars to pay debt. Poland ran itself fiscally austere and responsibly. They've been buyers of gold in the dip. So are there buyers and sellers of gold at these levels? Yes. Are emerging markets possibly selling into it? Yes. But right now I see funds short covering driving the market. I don't know that selling gold is going to solve your problem if you're an emerging market today.
It's interesting getting back to equity markets here. We are near the low. Yesterday was a bit of a head fake from, NASDAQ was really outperforming like it has all year, but there was some really just weakness across the board. And then you take a look at some of the headlines that came out yesterday as well, with China talking about, hey, we're not scared of a trade war with the U.S. And,
right.
More negative news out of Europe with Italy and things of that nature. Here we are. S&P's.
I don't know. They're excuses. Italy is irrelevant to the world.
As an Italian American, I resent that remark.
However, but it is irrelevant.
To the point,
you could ask
quickly dismissing
99
everything
out of 100 traders. They wouldn't even know what the price of the Italian index is.
I'm just saying. Here's the headline. Read it and dismiss it.
It's all
here's the
excuses.
Headline. Italy budget problems fighting with the EU are why the stock market in Germany is lower, or the stocks, whatever, is lower. Guess what? I don't care the reason. In fact, on the Gold Fix today, we talked about that. I read the tape. I predict the news, and then I see if I'm right about the news, and then I just trade them.
Well, they put the news in. That's what always makes me laugh. Like, you get the first CNBC headline, market up because of, XYZ. And then the market goes down and they go market down because of XYZ. So,
and
so
what did we used to say years ago? Your friends would say, what we used to say years ago, someone would say to you, one of my customers wants to know why this stock is higher. And I was in commodities. I would just turn, why is oil higher today, Vince? A broker would say to me, I turn around and say, tell your customer there are more buyers than sellers, or there's one buyer with more money than everyone else.
But
otherwise,
I will tell you,
I don't know. I don't care.
Getting back to the markets, volatility is now up 22.5%. S&P is $150 off the low. We are going to open in the low channel of the move. That's interesting. All the markets are acting very, very in line with what they should, which is good for us trading because we're going to get the clues clearly today. You have oil down $1.60. You have bonds up 106 on the high of the day, and you have the S&P taking out the low and volatility on the high tick of the day. So
I see taking another 50 handle. We have another 50 handles lower if the market settles below the level I mentioned earlier. I'm going to say that again.
Well, what is the settlement level that you're looking at?
Settlement level, okay. The reason I'm saying that is because it's a system number and a technical number lining up. It's kind of like a perfect storm setup, and we're moving away from it. So, I have a weekly number. If we settle on a weekly basis below 2738, I have 50 to 100 handles lower. Okay, that's that. Now on a
2738 on a closing.
If we settle below 2738, now we're already trading down into 2730. But I said 50 to 100 handles lower. Okay. 50 to 100, Larry. All right. But on the technical level, I don't have the number in front of me. I said it earlier, but it was I think it was 2721. If we settle below 2721, there's easily 50 handles lower, and it could happen extremely quickly. How's that? That's what I'm saying.
You know what? It just popped into my mind. It's funny because everybody wants to buy every dip, and it's funny because I get calls from brokers that I deal with. They're like, "Oh, we got to allocate capital. You got to buy." And what happens if we have a couple of years of down? I mean, people can't handle a week of down. What if you go down for a couple of years?
Well, I mean,
what if the market settles lower for 2 years? We're up 10 years in a row.
and you know what? That is what the government, I think, fears more than anything.
Well,
a slow orderly move lower, and people that are long stocks will be frogs in a pot boiling slowly. But a quick move lower, and there'll be grandmas in the streets with rolling pins, freaking out.
Man,
so yeah,
I don't see listen, I see a correction here. I see potentially another 3 to 5 to 10%, but it's, I don't see I hope that we have, I'm not calling a crash, but I hope we have really outsized type of moves, but I don't, I don't see it. But you know what? Maybe everybody is just so long and so complacent that, listen, going back to the marijuana or cannabis stocks, which I don't really trade, but they're a joke. I mean, they're producing something that you could grow in your house. Okay. I'm not saying you do, but you can. I mean, this product, is engineered and manufactured. I mean, it's not like
that's actually, there are two factors that are ignored on marijuana stocks for anyone who cares about fundamentals. Anyone who's buying fundamental stocks is not looking at efficiency of production and cost of production yet. So that's because they're in their manic phase. No one's looking at them as a business properly yet. Doesn't mean, just like you said, there's no protection in growing them. Anyone can grow it.
Yeah.
So the schedule for today, we got a busy day. Larry will be back on with this higher volatility. He'll be back on after the open, probably around 10 o'clock. Then we have at 11 o'clock, we have a special presentation from Top Step Trader. Top Step funds hundreds of traders every year, and so they're going to be talking with us about A, how you can become funded with them, but B, really the different trends that they see, what pitfalls traders get into, or what successful traders are doing, what traders that get themselves into trouble are doing. So you can learn from that, and they'll talk about their product, things like that. But they're a really interesting firm. So they're coming on at 11 o'clock to talk about that. Then at 1 o'clock, we have a presentation from crypto firm Mosaic. Jason Yanos has been on with us many times talking about the crypto market. And so he's going to give us an update. Seems like Bitcoin has done absolutely nothing in about a month and a half or 2 months.
Talk about something that's rigged. I mean, that
We'll
thing
ask
doesn't
him
even
about that.
doesn't trade any volume, and it's sitting at the same price, and it hasn't moved in 3 months.
Yeah, so we'll talk to him about that. And then
ridiculous.
Tom McEntee will be on with us looking at earning opportunities. And, so he's going to look at this week's earnings, some big names, and some option opportunities within those big names.
Yeah, for those of you who follow Tom or are more interested in what Tom does, he does a lot of, I wouldn't say it's his only specialty, but one of the things he's very knowledgeable is playing earnings events with options, whether it be vertically or horizontally. He likes to play good risk rewards present themselves right before earnings numbers. And I think it's something that you can learn from listening to him and repeat over and over in any industry, almost any industry, when earnings season comes up. I think that will be a valuable listen.
For sure. He's the best. I've watched him trade for over 30 years, and he's awesome. So look at Apple taking another leg lower, down over $5.
Fair to say that the first leg lower in the stock market started with the NASDAQ, and now the second leg lower is almost starting with the S&P. You know what I mean?
I mean, it looks,
I'm not saying the NASDAQ didn't catch up, but the NASDAQ is down a little bit more than the S&P in percentage terms. But before it was,
looking at my indicators, we should be lower. We actually should be taking the low out here. So
NASDAQ
we will
down
on
to
the opening.
I'm saying the rotation is dying. Rotate out of NASDAQ and S&P. Okay, NASDAQ was up yesterday. Now S&P leads us lower, and everything's catching up. Maybe.
I mean, the NASDAQ is just giving the half of what it outperformed the S&P by yesterday. So we'll keep an eye on everything. I'm excited. I think today is going to be a great trading day. Keep an eye on bonds. Keep an eye on oil. Keep an eye on the volatility index. Keep an eye on individual stocks. Watch the bank stocks today. They may give a cue if we're going to bounce. They probably will bounce first. Keep an eye on that. Interesting, all of these emerging markets that rallied yesterday have given back all of their gains plus. So right now the S&P is down 44 handles, about $1.50 from the low of the day. We will take that low on the opening most likely. I don't know where it stops. Oil is down $1.70. We were thinking about buying at 67.80. It's through our level. It's at 67.65. We may take a stab at it at 67.5. But I don't have an order in yet. I just want to see the opening. It's a puke of everything and a buying of bonds. So, the mantra is intact, and we'll see. Again, you got to be leery today because yesterday we saw it, and Mike and I were sitting here, and the S&P rallied $25 straight up without a downtick. Yeah. Literally. In 15 minutes.
Can I throw in one thing that we haven't done before, and I want to direct it? This is just factual information for active equity traders who like individual stocks. All right. The most active, that means most liquid, most volume, which means lends itself most to intraday day trading markets are today in the U.S. The SPY, Caterpillar, Apple, Tesla, the Triple Q, Amazon, and Baba, which is that search engine. Those markets are the most liquid, most active, and moving around the most. So least Roach Motel, most movement. Those are the sweet spot stocks this morning going into the opening.
We appreciate that. And S&P is actually on the low tick of the move, a box off the low. There are no stops in here at the 10 level yet. I was expecting a little bebop down, but we didn't get it yet. So maybe this is the level they're going to try to open the market at. I think the Dow is
on a weekly basis, it's a double bottom.
I think the Dow is down 500, but I could be a little off on that.
Dow futures 475.
Yeah. Okay.
So,
Yeah,
depends
they're
on
down
what
about
system you're looking
five.
at.
Yeah, they're down about $5. I would say we're going to open down $5, and then Spoo's just traded through 10. So yeah, it's going to be an interesting opening to say the least. If I had the nerve, I would be a buyer here against try to buy at like 7 or 8, and then use like a $10 stop against that. But I'd like to see the stocks open. I don't want to get screwed over by a stock's opening. So that's sort of where we stand, and we're positionless, and we're gonna see how the day horses out, and we'll be back to everybody later with updates. Any final thoughts on the market?
I thought of a tagline. It may not work for us, but it works today. We have no positions, but we definitely have opinions today so far. So look, we will be actively trading.
Yeah.
I'll be on the road, but headed back home today. I hope to be in the chat, but I have my levels in the S&P. I have nothing in the market, and I'll be keeping my eye on how the VIX correlates with the stock market today. I think that's my takeaway from this conversation.
This is a down 50 opening in the S&P. Vol is still popping. It's now up. Where did it go?
23%. They're calling
23. Yeah, 23.22. So the markets look very, very interesting. I would be more of a buyer than a seller at these levels, but
you don't see the trigger that makes you want to step in and put your toe in yet.
No, we could take I want to see the stocks open. That's important to me.
Yep.
So I want to
Right.
watch.
It's kind of like the first hour for me in commodities. You want to see if the stock order flow is going to do anything to change the futures.
Right. Exactly. All right, Vince.
Evil
I'll talk to you.
speculators.
I will see you in the chat. I'll talk to you later.